We're going to start that a little early because I think we have a little ground to make up. And we're not actually supposed to take our break until 1:50, so I wanted to cover a few other things here before we get to that next, and we have a half hour to go. So, Marla, let's get started. I have a couple things. Peter, if you're here. Oh, he's coming. I have a couple of things that came up. Now, last night, Lori, I've got no, we don't want you. You are free. You didn't have any questions. Yeah, don't sit there. Don't think you're off the hook that easy. There you go. Sorry, you have to come up front. Well, you can stay seated. I don't care. Now, last night, I during the social hour, I had a question. And it's going to kind of relate to Lori here a little bit. But the question was this, and I'm going to have to sit down to drive here a little bit. The question was framed in this way. Les, we are having peer review. Our peer reviewer has dinged us because we kind of followed your advice and didn't audit cash receipts and disbursements for our AHACPA contract. We have only one major program, it's a AHACPA contract. And we've tried to argue that, you are smart. Well, so they came up and said, can you help me out a little bit with this matter? Well, and this kind of goes back to Lori and to Peter both. So I'm going to start here and then let them kind of speak up as we go through this. Sorry, I needed to just change the size of this. Here is Handbook 4370.2. What is that? Can someone tell me what that magnification level is there? 150? What was it before? Okay, thank you. 180 is better, right? Okay, so here we read Handbook 4370.2. And it says, look, this handbook, now why reference this handbook? Because if I go down to cash management, I'm going to get the cash receipts and cash disbursements requirements that basically show up in the HUD audit guide. That's where they came from, okay? At least the basis of them came from. Now, it says this handbook applies to rental projects under a regulatory agreement that gives HUD the right to dictate certain things to the owner. Peter, does our current regulatory agreement give HUD the right to dictate those things to a loan, an owner with a loan?
I believe so.
We all believe so. The answer is yes.
It's the gospel.
It's the gospel, according to San Pietro.
No. According to Secretary Castro.
Yes. Dr. Castro's involved. So yes, the answer is yes. The regulatory agreement dictates. So if I could take a second and go there, we would go down to the financial operations and project management, and it would say you need to do this, you need to do that. And that doesn't mention cash receipts specifically, but it gives HUD the right to dictate operation issues.
Sure.
So then we say, okay, look, here's what it says. So we agree the regulatory agreement gives us the right, and we come down to the projects that are subject to this handbook. 202, 207M, 207, 20 blah, 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 213, 221s, 232, 242,
243.
All the way down the list. Anyone see Section 8 listed there?
Not once.
Not once, right? So, does your HAP contract give HUD the right to dictate these things? What?
This particular handbook just deals with projects. Projects only. Going way back, as old as this thing might be, it was just about projects. It's not about, then if you look, maybe it says the same thing when you look in the Section 8 handbook. I don't know.
Well, we know this.
Or are we getting ahead of myself?
Well, we know this. The regulatory agreements said it, gave us that authority. It's always been interpreted that way.
Yeah.
But we also know that in most cases our HAP contracts are silent. Okay? So that's the first level. So you have to go back to your regulatory agreement and prove, hey, my regulatory agreement says what? At the worst, it has reserve for replacement requirements. It may restrict me to distributions. That's a few of those. But most of them don't have anything else to say about operations.
Well, no, it just says operations used for, reasonable operating expenses of the project and allowable withdrawals from, surplus cash, da-da-da-da.
At the most.
Yeah.
So the cash receipts and cash disbursements issues aren't really part of that discussion. And then the further thing comes back into, if you will, I was got to grab the next one. Here it was right here. The regulatory, the reports, the compliance reports from the HUD Audit Guide, Chapter 2. So, this thing says that what? I'm too big. But the peer reviewer didn't believe it. Sorry. So here you go. Here's what the AHACPA and HUD have included at the bottom of the first page of the Major Program Compliance Report. AUC 935, the old SAS 117, basically defines applicable compliance requirements as the compliance requirements that are still too big to be read on the screen, subject to the compliance audit. According to the guide, the auditor's reporting compliance with requirements applicable to HUD programs expresses the auditor's opinion on whether the auditee complied with the requirements that, if non-compliance occurred, would have a direct and material effect on the HUD program. Well, that's nice. Continue on. Therefore, in a compliance audit performed in accordance with the guide, the applicable compliance requirements, as the term is defined in the SAS, are those that could have a direct and material effect on the program. That's a lot of doublespeak to get to the last sentence, but it says, accordingly, for the purpose of adopting this section to a compliance audit performed in accordance with the HUD Audit Guide, the term applicable has been replaced with direct and material. So, the only compliance requirements I am required to test are those that are direct and material to the program. If it's not even in the regulatory agreement, why would I audit the client's compliance with cash receipts and disbursement procedures that aren't even technically required in the agreement? They're not direct. Whether you think they're material or not is another matter, right? See, George thinks I'm wrong. George thought I was wrong too. I'm wrong. Premise of what? Two premises I'm forgetting. I don't want him to have the microphone.
Less is A. Okay, it's a regulated project to begin with. You have no independence on that. It's a regulated project. This is the regulated world. And you have signed the regulatory agreement. It says you have to follow the HUD regulations. And one of the things is HUD Audit Guide is pursuant to the HUD regulations. We did not spend hours and hours in writing that guide for no reason. So there is a basis for it. There is a backbone for that audit guide. So that is why, I'm sorry to say that, you have to follow the audit guide. You know, in 2006, how much time I spent and other people spent, AHACPA meetings and all that.
With all the time spent.
Yeah, so we have to, that is the thing. And then if you go to the new HAP contracts tell you that you have to follow all these HUD regulations too. And they are attaching riders to the old ones when you go for renewals.
Yeah. Okay. Now let me address this specifically. There's an opinion. John has the same opinion. Others, I know others do too. I'm not against that opinion. Clearly, I embrace the fact that some people don't agree with this position. Now, George, when I confronted him with all the evidence, he said he ended up backing down to say, "Look, I just don't think you can do an audit without cash receipts and disbursements testing." Okay, that's fine, but it doesn't become part of my compliance audit. Now, Morge has indicated that he believes that the guide has its subject. If I have a 230, nonprofit, Section 8, and I go, what's the difference between a compliance supplement for that project and, say, the HUD Audit Guide? I'm going to make my argument. So you'll agree to disagree with me at the end or whatever. But here's my argument. In the compliance supplement, what's different? Thank you. Exactly right. A lot less work. Why is that? Because they've indicated in the compliance supplement that I have 14 types of compliance requirements, and they give me a matrix that tells me which ones apply, right? Now, they indicate that they have and they're also program specific. My contention is this, and I think, Lori, you would probably, there are other practitioners I know who agree with me, so Morge has got that side of the argument, and we'll just give you the facts and you choose. I mean, nobody can tell you one way or the other, right? Yeah, but I agree. Allowable services. I provide the people the rent. I maintain the unit. Well, George backed down off that a little bit because he never had the regulatory agreement to back him up.
I was talking good things about you, Mike.
We know that. So here's the thing.
So allowable services, your project receipts have to be spent on project purposes, right? And George Dados wanted that to happen because what was happening was the project funds were being used for non-project purposes. So if you go with the compliance supplement, still you'll be questionable.
I don't know that you will find that. Allowable activities, and I won't pull it up. It's going to take too long to pull it up right now. But here's what I'll summarize it. Argument A, argument B. Okay? I don't believe it's technically required under the regulatory agreement for the client to do that as I see it in the loan. Obviously, we on the loan, we absolutely 100% agree. They have every right to dictate that. Equity skimming is involved. But if I have no restrictions on distribution, can I have equity skimming on a Section 8 contract? If I have no distribution limitations, I have no requirement at all to have surplus cash monitored, do I live under surplus cash? Peter, what's been REAC's position on that?
Well, REAC still collects up the template.
Well, the template has it.
Right, and that's usually the confusion. Geez, why do I have to submit this if it has no effect? Well, because it's part of the template. End of story. But no, if it's a non-insured Section 8, no regulatory agreement, then there are no restrictions on distribution of surplus cash because HUD has not invested in the project. They couldn't care less what the developer owner is doing with their money. As
long as they rent the units to Section 8 qualified people and collect the right rent.
That's it. But again, HUD is not at risk for the project.
That was going to be my last comment for the folks last night. So anyway, look, I know this is an argument some people like and some people don't like. Morge doesn't like it. And I know George and I argued about it before, and he came up and said, you have to test cash receipts. And I said, I agree. I have to do something in the audit, but I don't have to do it for compliance. So that will leave you with that option, okay? Now you've heard, I think both arguments are fairly well stated. My further thing is the audit guide is general in nature. Nobody wrote a matrix to say which things apply to which. So I don't have to deal with residual receipts if I'm not required to deal with residual receipts. So we have that argument continuing on here. Morge and I disagree very little. Really, I mean, in real life. We don't disagree hardly on anything. We probably disagree here today on this one thing. So if you view that as too risky for you, I'm okay with that. Nobody's going to tell you you don't have to do it or you shouldn't do it. We just believe, Lori, is this right, that it's not necessarily for us a requirement that we would audit in that situation. Is that fair to say?
But I do want to clarify, Les, just to make sure I heard you correctly. It's the Section 8 contract that you're talking about here. I thought I heard you say a couple times if you had a regulatory agreement.
If I have a regulatory agreement of any an insured mortgage regulatory agreement, whatever that is, that's more like my actual regulatory agreement, right. We're never going to have this argument. It's absolutely required, right. Minimum sample size. I thought I heard it the
opposite way. That's the only reason I say that.
Please, thank you very much for...
So I am on your side there.
Have a teammate. So anyway, that's how I approach it. You approach it that way. I know HUD has approached it that way from one perspective, not cash receipts and disbursements, but I know Scott Loveday not Scott, but Phil Smallwood was here 3 years ago, and he said right up, if you're not under a regulatory agreement that requires restrictions on distributions, we don't care about your surplus cash calculation. We'll collect it, but you're not on the hook to live to it. So under that scenario, he said, we want you to write and there was somebody else that brought this up at the break, we want you to write a footnote in the statement saying we are not subject to surplus cash limitations or distribution limitations due to surplus cash. And they're supposed to read that. Now the person said, we have that footnote. And what happened? They didn't read it. And they sent him to DEC. So my only comment to that sort of thing is this. Look, sometimes those footnotes, as they look, are very hard to read. And that's one footnote. You know what we do to that? Under our theory, if we have a problem? What's that? Asterisks all over it. You can do that. Sometimes we'll just take that before we cut and paste it into the place. We'll just convert it to caps. If you have to scream at them, you can scream at them. Right? The one thing about it is when you look at it, it just so stands out so bad. You have to, it's the only thing you can see on that format. Because it's such a blend of text, if you put it in caps, they must look. Now, Kathy has a lot of other tricks like underbars and some asterisks that they will use for certain things. But that one, we're coming to the conclusion in our discussions this year that if they aren't reading the footnote, it's because I have a hard time reading the footnote. Because it's a big gold line, no formatting, you can't tell paragraph breaks, nothing. It's miserable. So if I really want them to know something, I'll segregate it out. Asterisks at the beginning and end, 3 or 4 asterisks, do that. Caps, do that. Kathy uses underbars for paragraph breaks on certain things. So anyway, that should help that. But I do believe there are certain, if I were able to write the audit guide, the reason some of this conversation exists, by the way, and why I'm anxious to have the competing views is if we're going to come up, it's pretty simple now that what we have to do is we're going to have to write a suggested audit guide back to Jim Heist as an industry and say, look, you guys need some ideas. We have to do some stuff. Now, they can choose to ignore it or not, but we want to make some suggestions. One of those suggestions is a clarification of these requirements, okay? Or a matrix. Since they're so keen to stay with A133 level, kind of stay competitive, put a matrix together to tell me which things apply in which situation. That would make that easier. But until then, here's what I say. Look, if I can support it and it helps me, I'm going to do that. If it kind of keeps the budget low or whatever, I'd rather have you focus on better tenant file testing than cash receipts testing. But I also like the changes she made to cash receipts testing yesterday anyway. So anyway, that's an idea. Okay, the next one. Now this was one Kathy said she wasn't going to type, so I'm going to read it. It's not on the slides. By the way, Kathy, I guess you emailed those to me, right? I didn't stop to load it here. Peter, maybe you go ahead and read this, because I think it was actually a comment based on yesterday.
We're operating under the 2011 regulatory agreement. My mother, the GP, in a 221D4 is located in Atlanta, which did a 223A7 refi in 2012. Mom is terminally ill. My sister and I are limited partners and want to become co-GPs upon my mom's passing. We would like to start the TPA process, or it says to skip, excuse me, thank you. There is a conflict between paragraph 36A III in our regulatory agreement that says borrower need not obtain the written approval of HUD for acquisition of an interest through inheritance, and a portal.hud.gov page saying if control of a project passes to heirs but remains insured, a full TPA is required. Peter advised me to talk to HUD, then I found this conflict. Is a TPA required? Should I talk this over with my HUD project manager? Yes. Should I be hiring an attorney? Not yet. And if so, an attorney of what specialty? Dealing with HUD? There are those that do that. There are lots of them in DC. They're expensive. Should we be adding or an auditor for advice on this? Anything else? I still go back to, first and foremost, since it is, family inheritance thing, sit down, try to talk to HUD about it, and then point out the conflicting views on, we've got 2 HUD web pages here, or at least, 2 HUD documents, A, the regulatory agreement, and B, portal HUD.gov. I'd lean real heavy on the regulatory agreement since it is something that you signed along with HUD. That's where I'd go. Anybody else? It just says the general partner.
Yeah, so that is, I think 1%, I think. So if it is below 5%, you don't even have to go through all these processes, HUD approval of change in ownership and all that. TPA is definitely not the answer here because they are not transferring the physical assets.
That's right. It's not a TPA, transfer of physical asset.
It is just a 25-30 clearance issue, and they already have that because they already the limited partners. They're already in this deal, I understand.
Right. Says
So,
here,
yeah.
they are limited partners and we want to become co-GPs
Yes.
when she passes.
So this is, I don't think they have to go too hard if it is less than 5%. They can make the change and just inform the project manager or the higher up, the senior project manager. Usually, like if it was a Chicago office, I would deal with a deputy director of multifamily and inform them. And don't spend money on the attorney yet because it is not a TPA.
Definitely don't do that.
You don't need a 25-30 clearance for the time
Right.
being unless they are sticking to it and ask for a new
And if you do spend money on an attorney, it's not a project expense.
Yes. Yeah, you're right about
Well,
that. So,
right or wrong?
yeah.
You're right. You're right.
So definitely the question.
Once a HUD guy, always a HUD guy.
That's right. That's right. Hey, I know who still signs my check, so there.
Now, Morge, one
So it is not a
comment.
TPA. It is not a TPA. That's
All right.
Let me just add one comment. Handbook 4350.1. So I went to while I was at lunch. I had that paper, and see to me I'm going no TPA, right? There's certainly no full TPA. That was woo. But so I went to the handbook and it just said here 13.8. This is under the section modified TPA or modified review. Let me just say that modified review. Substitution of one or more of the general partners. Well, we are substituting the general partner for a new one. There's only one general partner. So it's subject to a modified review. And I think that's what you're saying. So what we all agree on is we don't agree with the website thing, the Q&A about full TPA. So the guidance here would be modified review. The regulatory agreement says what it says, and I'm with Morge on this one. I would start planning the process for substitution in the agreements and move forward.
always you have to talk to the deputy director of multifamily in that particular region. So they'll be on board and it will be
Well, see, that's
easy
the
process.
thing.
Yeah.
To me, just what you said is the key thing, 25-30, right?
That is.
All 3 parties that are currently on the project, general partner, 2 limited partners, they've all gone through the 25-30 review. All we're doing now is we're not adding any new people to the 25-30. The current people that are staying are already on or in apps and have been approved by HUD. All we're going to do is substitute the general partner.
And I'm assuming it is less than 5% ownership. If it was more than 50 or more, then they have tax issues too.
Well, they have other
Technical
issues.
termination and all
But,
that.
but ownership, I'm not sure. Ownership was going to pass down through the inheritance anyway. I'm not sure who owned what, but the general partner piece, it's not a full
It must be,
TPA.
yeah. It's
We
a
all
limited.
agree. So I think this would help you. I would come back to that, the handbook, whoever's given that question.
They can hire me, I'll charge less than the attorney.
There you go. And he knows people.
Question is, do the IRS repair rules, the new ones that have become effective 1/1, constitute gap? Go for it.
In my eyes, the the IRS rules have become more in line with what I thought should have been happening all along as far as what they should be. Why am I cutting out?
Yeah, I don't know. Here.
No, am I on? Okay.
You're wrong.
I'm not sure exactly what the question's asking here, but most of our properties had to scale back on what they were capitalizing, which is great because a lot of times we were having, places that had $25,000 cap policies, and now they're becoming more in line with each other and going into where I would have thought GAAP should have been all along. So as far as, I guess I'm not too understanding of what this question's asking.
Anyone want to clarify that?
I think what they're looking at is, do they have a temporary difference? Yeah, you end up with a temporary difference in deferred taxes.
It was on. I never touched it.
Not talking. Who's not on?
We'll try this. Is this now back working? Yeah. The accounting issue appears to be, do we have temporary differences for establishing deferred tax assets or liabilities? That's what it appears to be. Somebody's worried about deferred assets and liabilities. Whoever submitted it, is that where you were headed? Do I need to calculate it? Am I going to be with a new temporary difference between my GAAP policies and tax policies? Nobody wants to claim ownership here? I just don't think that the differences are going to be that material. I guess one other thought I've had about this is, if you've already got a GAAP policy that you've been disclosing and following for a number of years and getting a clean opinion from the auditors about your capitalization policies, and you're saying you want to change the IRS rules about repairs, you may have a problem changing your GAAP. Why would you change GAAP to the IRS rules?
The next question that came out of that yesterday, and I don't know if this was actually submitted, but since it's on the topic, let's say I established a $5,000 limit under these new policies, so I adopted the policy, and I'm expensing those items. People have asked me, what do they think MBI will do with that? I have no idea. Obviously, you're going to have those repairs and maintenance expenses, but I'm going to assume that most of them were paid for from the reserve anyway. And so all you're going to do is highlight that those things were, you're going to list it down in S10030, items included in the expense items that were paid for from the reserve. You turned off again? And that's where it would go. So, okay, what's next, Lori?
I can't get anything to work.
Can't read it.
What do you want me to do? I'm sorry. Okay, so before 2012, for many years, my former boss had unsubmitted FAC audit reports required by single audit OMB A133. How would I deal with them? So it was unsubmitted to HUD or unsubmitted to A133?
I think the clearinghouse.
It's clearinghouse.
I guess question one is, did they call the clearinghouse and ask?
None of them are working. This one's,
I don't know.
it's on, but
Do you have an answer for that, Marlon?
no, I mean, that microphone and this one are not working. The two labs are working.
I don't know what the question means.
Well, it sounds like they have to go back and get these things filed, and they don't necessarily want to put their name on them because they're coming in all late.
Okay.
File anyways, what the hell?
I think if,
They don't want to be the audit scene.
Well, you know,
They don't want to be the auditor certification on it.
How do you unsubmit something?
Yeah, how do you, well, it's not unsubmitting, it's submitting,
Not
but
submitted.
just bite the bullet, go do
now is
it.
the question here, you want to submit all the old ones?
Yeah.
Okay. We want to submit the old ones. Now, what if we were in REAC? So they hadn't submitted through REAC, and they're asking you, so maybe what had happened, and I see this all the time, audits are done by somebody, and they didn't do the REAC submission. What's happening then?
Penalties.
Again, once a HUD guy,
It's serious.
I know,
That's
but no,
true.
from the submission perspective.
They had to put them in.
Well, is the CPA, the new CPA, going to come in now 5 years later and input all those and attest to them on an AUP engagement?
Well, okay, but that's HUD.
I'm talking HUD. So if that were the case, is there any certification given on the FAC when you submit it that you're the CPA?
Yes.
Yeah. Yeah.
That's REACT.
That's right. We're not talking.
I can submit a REACT because my only engagement is I'm comparing A to B.
Correct.
But when I go to the FAC and I do the clearinghouse, what certification am I giving?
You're giving an auditor cert. There is a whole thing.
So I can't submit those.
No.
Right.
That's my point.
Oh, okay.
I can submit my current one, but I can't submit any old ones. Oh, okay. Okay, does that answer the question as far as I see it? That's why I use that. Jay, go ahead. I don't have a microphone, so.
Is this question coming from the CPA or the entity? Because it's confusing. Because if it's if it's a new CPA who's never been there before, that's one thing. If it's a CPA who is part of a firm and the partner who's no longer there or something, it's another thing. In the same firm, it's another thing. Or if it's an industry guy who is the controller is now the CFO because the former boss is the CFO, it's another thing. I mean, clearly the first situation is if you're new on the block, you deal with it because you can't. I would not be associated with that entity if they hadn't filed the previous ones, if I was new coming in. And if I were succeeding my boss in the organization, I would deal with it as well, because otherwise I'm not going to get another CPA a reputable CPA to audit and file, because you've got late submissions, the lack of submissions in the past, which is a finding. And if I were the CPA and the partner on the job who's no longer there, well, that's a situation that I think in that case you need to deal with the ownership of the partnership, and they need to talk to their legal counsel, and they need to figure out how to deal with it that way. That would be my.
Didn't really. It's got a wire problem. I think the key component is this. You can't submit for somebody else, right? REACT, I can go submit all day long because it's an engagement to compare A to B, and I'm not really, I can have a different CPA do that. But once you're late on these and missing, you're in non-compliance, and now we have a fairly significant issue because the owner can't get up to speed without the right CPA doing the work. That's the problem I think you're pointing at too, Jay, isn't it? It's hard to get in compliance. If I'm the new CPA and I'm auditing you, we're in a state of really big non-compliance, and you can't get in compliance unless you say the guy died. I don't know what to do at that stage, right? You're going to have to get some work out. So anyway, anything else there? Lori, what's next?
This one's for Peter. A client of ours will close on selling his property in January or February of 15. We will have to do the 12/31/14 audit. The question is, can we get a waiver to roll the stub in 15 into our 14 audit, or will the seller have to do the year-end audit plus a stub year from year-end to the close date? I don't think it would be an issue if you were not closing so close to after year-end. This is kind of reverse of what we usually see, and I don't know the answer. off the top of that person's head?
As far as I know, the stub, and it's like the final stub as opposed to the initial stub, can be rolled into the prior full year. One goes onto the REAC website, signs in to do an administrative request, and you should be able to make the request online to do up to 120 days, because that's the rule for the initial, so I'll assume the rule for the final is the same, up to 120 days. REAC can approve that, and the REAC analyst just goes into the inbox, picks it up and hits approve, and then you're all good to go. If it goes past 120 days, then that's beyond REAC's authority to initiate the stub. We just lost the video up there. So it goes beyond their authority. So what I would recommend is that the idea is go to the field office with the request. Now that'll take somewhat longer, but it's still possible to roll that final period into the previous full year. Hello?
There was a second question in the deck.
Okay.
In the slide deck about this. So we can initially react to defer up to 120 days in housing notice 2010-09. It was extended. Now here's what I added to this. So is the HUD's policy to defer up to 120 days? It's always been 90. When that notice came out, it went to 120 days. In
Right.
2012, HUD issued.
Nope.
It's a sign. It's a sign. Go home. In 2012, that notice 12/7. So, in 2012, HUD gave out notice 12/17, and it indefinitely extended that authority for REACT to do that for 120 days indefinitely. It never expires. So not only are you good at 90 days, you're really good up to 120 days. So that's what I want. When that came up yesterday, I wasn't sure, and I had to go look at that online to make sure that the 12 notice did stay in indefinitely.
Okay.
So it's now 120 days. Now I don't know that I see a lot extending my year end into the stub for the next few months. Kathy, have we ever submitted one of those? Just you can nod your head, yes or no. We have. Okay, so we've rolled a 12 statement into 13 and had it 14 months. They didn't allow you to go forward, just backward. So Kathy says we've been able to do it before. It might be hit or miss. I don't know. You've done it? Okay, so what Kathy and Morge are both saying is what I was going to finish with is that despite all of that being automatic, you have to apply in REACT through an administrative request for a deferment. That's all it is. You will never get a waiver, but you will get a deferment. Are we square? You got a waiver. They just said no. I mean, they said you don't have to file. Well, okay. See, to me, I think that deferment. They called it a waiver, but, we just deferred the situation for an extra few months. But if they called it a waiver, good for them. Yeah, so they let her carry her prorated days of November, December into a January, February close. Oh, December the next year. Well, you were the buyer, though. Buyers we have no problem with. So buyers, you close on September 1st, right? That's 120 days. Or September 2nd, I can't remember the thing. But I have 120 days. You submit the request, they will automatically approve it. You'll do a 16-month audit next year, right? That's very common. The issue is when I'm the seller and I close at March 1st. And I have a December 31st requirement. Kathy says we've seen some of those approved. Other people have told me they were denied. Mort said he was denied. What in the world?
Was it just HUD insurance? Sure, but I might have messed up.
Oh, I don't remember on the first one. But either way, the requirement's the same because they all follow UFERS. whether it's insured or uninsured, if it had a filing requirement under the Section 8 contract, it's filing the same as if it had a regulatory agreement, because they both follow uniform financial reporting standards.
Well, what I was thinking was if it was only HUD, then those other months would just get waived when it got sold.
Well, here's the waiver situation. The waiver comes into play. Sorry, this is really sounding weird, but under the waiver situation, what happens is I'm essentially prepaying the mortgage. So I'm saying I've refinanced with a conventional loan. Okay, so I'm in October, and I get done, I say, we're out of HUD. Yay! The last required filing was the last full year that was required to be filed. So say I refiled 14, my last audit required was 13, and I'm done. As long as I don't have any agreements hanging open requiring me to file. Right, Peter?
Correct.
Anything else coming out of that? I don't want any, this is one of those things we just don't want confusion on. And if you ever have a question, go to our website, download the Miller Memorandum.
Right.
Okay? Or go to HUD's multifamily website, get that submission requirements and REMS data dependencies manual. The shortcut was always the Miller Memo. And it has them lined out by situation. 1, 2, 3, 4, 5, whatever.
Including when the project is a new project.
Yes.
When it refis, when it's sold, when it's this, when it's that. So, all right.
Okay, you want to go back?
You want to take a break?
Oh, is it break time?
So, when an audit has no findings, this condition must be reported in the REAC submission. But if it is reported in the REAC findings section, a reportable finding could be triggered in REAC. To prevent a negative reporting issue, how should a no findings condition be reported?
I had this question yesterday, and Kathy gave the answer.
What was Kathy's answer?
It doesn't
She
show
wasn't
up.
on the microphone.
No, I know, but it doesn't show up in the REAC template. In other words, so if in the hard copy you're saying we had no findings.
Right.
In the REAC template, you're not saying we had no
Right.
findings.
You
It's
don't go
just-
into that
That's right.
tab and you don't
That's
submit
right.
anything.
You don't submit anything. So
Right.
yeah, okay.
Yeah, I looked, there was no field in the React template. So what I did was, in some cases, I just put in a footnote just for them, in case.
In case.
Because in my office, I do enough HUD audits. When you kind of sends a team of people every few years into my office to look at my work papers. So I have to be careful from his side.
All right.
Okay, this next one's for for Peter as well. It's just clarifying slides 33 and 34.
All right, so 33 deals with that HUD Housing Notice 2013-23, which, yikes, talk fast, which basically exempts, right, entities expending less than $500,000 in federal awards. It says limited the audited submission to entities expending more than $500,000. That's kind of ass backwards. It should say if you have less than $500,000 in combined federal financial assistance, then you don't submit an audit. All right, you don't submit an audit, you submit owner certified statements. You're a for-profit entity, and HUD then last year, 2013, gave you an out, right? So it's not an audit, but owner-certified submissions. Clarify what constitutes federal awards, so it's this, line 1 through 11. And so you add up what's the loan balance, so that's the amount of the loan insurance. Then the next thing is you pick up any tenant subsidies you're getting. And then the third thing is you pick up if you've got an interest reduction payment of Section 236, that interest subsidy also counts as federal financial assistance. So that's what you pick up, all right? And then
Part 2 then is asking, well, what about picking up home and CDBG funds if they're subrecipients from state and local government?
all right. Les and I discussed this very question because someone came up to us and talked to us about if there was a home loan. And we decided that, yes, you would include that. Is that correct, sir?
Well, I think we decided at the end what we would include it if the requirement of my agreement required me to do it. Some states take the audits on themselves. Maybe you were left, there was another lady that came up,
Okay.
and she said, look, my state does that, and I think it's in the agreement. So whatever
That's what you
agreement
said,
you
read the
get,
agreement.
yes, it's in the recipient agreement. Some recipients have to audit,
What's in the recipient agreement? That an audit's required?
whether it's required
Oh,
or
okay,
not.
all right, okay.
Some states take it on, other states dish it out to the recipient. So what we came up with finally, and now you might have walked away, but the idea was whatever is in your agreement is what you do. If the agreement is silent, so are you. We
So
agree?
you're saying if the agreement is silent as to the need for an audit,
You don't have one.
you don't have one, so you don't include that in totaling up your combined federal financial assistance.
Yes, because
And if an
state
audit is
kept it.
required of that money, then you do put the amount into your computation of federal financial assistance.
the question came back, I think, and really home funds are quite unique
Yeah.
in that regard, is who's responsible for dealing with the compliance requirements of the audit? And if they want to make you report, there are some where they have a report and they make certain, the recipients report certain information to the state. Some have audits. I've had a whole bag of whatever, so that's what came out of that finally. No, we agree. So what we're saying is, if those federal funds on that slide right there, the orange thing, it said, does the organization have other federal funding sources other than those listed above? Now, if you have been stuck with the requirement, and it's in the agreement, then you have to consider those as federal awards and you audit under that home fund. And that's why you would consider it. There are cases where you would not consider it because you're not required to audit compliance with the program.
Correct, but it is part of the other federal funds. It's part of the other federal funds,
I think
right?
the only question, yes. Well, yes, but. And here we're going to find
Very confusing.
it's who had the expenditure, who's accountable for the expenditure of the award. Now, you may have spent it here, but you may be almost like a vendor in that situation. So you may be a recipient of money, but how is the agency treating you? Are they treating you as a sub-recipient and giving you requirements, or are they treating you more like a vendor?
Got it.
Okay, that's the difference. Because we know voucher money goes to a project, but they're clearly not responsible for compliance, and they don't consider that in their federal awards. It's federal money, but you don't do the lease testing, right? So the housing authority does the lease testing. And I think that's the difference, okay?
Okay, this one I think maybe less. I have a leased nursing home client that was referred to DEC because REAC said the rent did not cover the debt service, probably because this was a 6-month audit. The rent is $60,000, the mortgage payment is $55,000, including all the various reserves and P&I. We gave this info to the DEC analyst, and he still does not know how this will be fixed. He still wants to know how this will be fixed.
Look, here's the thing. I think the question comes out of this. So rent for 6 months is $60,000, $5,000 a month, or is that $10,000 a month? I'm assuming that the rent you're listing is 6 months worth of rent. And the mortgage payments for those 6 months were $55,000. How did you get haywire in this deal? Well, down on S1000, oh whatever, you listed the annual debt service requirements to be $110,000. So that was the annual requirement, and it measured against that. That's why the flag automatically went out to REAC. That's why this is here in the first place. Your rent is not short from the mortgage payment. DEC said it was short because REACT said it was short because you told them it was short by mistake. So if you're still here, send me the submission. Email me. I'll keep you, it's confidential now, right? I'll look at it. I'm pretty sure that's what happened. There's no other reason for this to be a trigger. So what happened is in S1000, what is it, 020 or 010, Kathy? Is debt. Which one's debt?
10, I think.
Okay. It's the wrong time to ask her right now. She's so programmed, it's muscle memory, she can't think about it at the time. But I think it's 010.
HUD Part 2, number 1.
Part 2, number 1. That's 010. And I think what you lose, go back and view your submission. I think you put the annual requirement down of 110,000, measured against a revenue number of 60,000, and the metrics kicked you out. Yes, Morge.
You do your direct cash flow, and you share rental receipts for what, 60,000, and your disbursements for debt, interest, and all of that is what, say, 20,000 excess. Then you're short of cash there. So that will be a triggering event for the analyst. They will pick it up. And the client should be lucky that they picked them up now, because they would have put money as debit cash credit due to, then repaid that back after they increase the lease next year. They would be in a much bad situation then. So they should fix the situation now, make the rent, equal to or more than what the payments are. If you don't have to put in the footnote. They pick it up from the direct method cash flow. Yes.
I agree completely. So just, if that's you, send it to me. Let me look at it real quick, and then I'll give you some advice on dealing with DEC based on what we see there. Because I really don't know what it looks like. If I had a copy of the submission, we'd probably be able to. Yeah, it's probably just a miscommunication in the submission.
Okay, so this one, if a client is still under an old reg agreement, are they still able to place excess cash into the escrow deposits account to avoid a residual receipts deposit? This has always been an issue, especially in nonprofits where they control it.
Yeah.
But you don't ever show a sufficiency on line 3. You only show deficiencies at the bottom half. So,
Peter, you have something to say here?
I said, yeah, they can still do that. I mean, it's still permissible. Is it correct? Is it honest?
is it ethical?
Is it ethical? Is it living the spirit of the law?
Right.
No, but I mean, can they still do it?
Cash them eventually, because how many years are you going to build up these things? Escrows and reserves. Someday it will have or else. Now all these not-for-profit projects are in bad shape, so they need repair. So they are selling these to for-profit entities. At that point of time, HUD will say, hey, what's going on here? Before signing off, now people have become educated there at HUD, and they're looking at things and they're using consultants to review these TPAs and all of that. So if they come to me, I would certainly write a report and tell them this is a thing and this money should have been deposited into residual receipts, so on and so forth. So there could be some problems down the road. It may be a quick fix, as you said, for today, but in the long run, this is not a good business advice from a CPA. I would rather do things right and not get my client into problems.
I can tell you here, just an extra perspective from an auditor view. One of the problems that come up with this question is, should I give them a finding? And I say, tell me the regulatory requirement where it prohibits them from doing that. Because I don't like the pushback saying, Les, where did it come from? Show me where it comes from. I don't know that's the voice, but that's what I hear.
Mm-hmm.
I know, but my point is they won't be able to show me where. And so the issue comes back to, I'm not very prone to give them findings or suggest findings in situations like that. I'm down to the management. This is, I don't think you're right. I don't think this is good. I don't think all this stuff is, just like Morge said.
Give them good sound business advice. Correct the situation now. So
and if they choose not to, I don't know what to say. I'm probably still commenting on the management letter saying, look, you're just running the risk of having big problems.
Last month you were in my office. My partner was so livid on Pollock, right?
Mm-hmm.
He didn't even want to mention his name.
Didn't want to say that he who should not be named.
Yes. So
I think that's where you're at. I can't prove at any point in time it's wrong by the regulatory requirements. But HUD's definitely shown every sign that they don't like it, and that's why the new regulatory agreement for nonprofits, or for that section says, reserves required by HUD. So an excess painting reserve or other things like that, they're clearly moved for the nonprofit to say, we're only going to allow you to reserve things required in your regulatory agreement. That's why I think they said we're under an old regulatory agreement, because the new one's going to snip it in the bud. Okay.
Tax expert here, but in light of the final cap and repair regs issued by the IRS, how are the projects treating filing of IRS Form 3115? Application for a change of accounting method. I've heard some projects are filing the 3115 blank, basically saying there's no change of accounting method.
Hang on.
This is a hot topic, I think. In my office, the office manager received a brochure. We are giving a seminar, $350 a person, for this, how to fill out this form. I was in a conference out of town. I immediately responded to her, said, no, we are not going to attend that. This is a pretty standard form we've been using for the change in accounting method in the past. And if you read the instructions, it is very self-explanatory. And, you know, there is no such thing, you know.
So the answer is no.
Yeah, Hank attested to it. My tax
So your
partner.
guys have indicated that they believe the answer is no.
Mhm, yeah.
Yeah,
I don't really have a big opinion on this one. So.
Yeah, I mean, changing your tax
Oh.
methodology has nothing to do with GAAP financial reporting, period. So.
Well, no, I think they're really talking about filing the 3115 blank, saying there was no, from IRS purpose. This really is a tax question.
It's a tax question.
You don't file blank change in accounting. Either
No,
change-
you don't do
you're
that.
changing accounting or you're not. The big issue is, especially with HUD, you got buildings, okay? There's some CPA firms that are pushing for the 3115s. If you do it in 2014, it's free. If you do it in 2015, it's $7,000, okay?
So make a decision fast.
That's why they're pushing that, but you gotta look at your project and convince your project to let you come in and take a look at what they've done and everything to see if there's any reason to change the accounting method. For example, you put a roof on a building. You can take the old roof and write it off if it's not fully depreciated. That's a change in accounting, okay? You'd have to file the 3115. So you gotta know your project, and today is what, December 10th, you're running out of time. In answer to the first question that came up about the tax issue, the regulations state that whatever you do for tax, you must do for book. So if I expense it for tax, I gotta expense it for book. If I capitalize it for tax, I gotta capitalize it for book. If an agent comes in, he's gonna compare that if you get audited. Remember, you have to be audited. At 3115, by the way, I'm not filing any of them. You have to be audited. They're not coming around looking for 3115s. You gotta be audited for them to come up with a change in accounting that you didn't file for the change. But again, whatever you do, and you still will have timing differences. The regulations do not stress that you have to use straight line depreciation. You'll have timing difference between depreciation. 179 is not GAAP. You can do 179. So you're always gonna have timing differences. All it's saying is, if you capitalize it, you gotta do it for both, and they'll compare it.
And I think the issue for that one is that most people are changing GAAP to match the $5,000 limit. And I think, Lori, that's what you were saying a little bit too. Their clients are coming back to that saying, well, we can only go to 5 now for IRS. Many people were GAAP way below 5, and they're coming, I hope because I agree completely, I hope everybody understood we were probably talking about going to $5,000 for both GAAP and tax, or coming back, dialing back GAAP to match the tax, right? That's why when you commented on that, I think you were fully compliant with what he was saying. You were trying to be consistent between both methods. The limit is the limit. There's no difference in the limit between GAAP and tax capitalization anymore.
Now
There's no difference, I meant.
That 5,000 is the de minimis rule.
Yeah, I agree.
Okay, it only counts, well, it counts for government, it counts for if you do an audit. If you're not auditing that entity, it's only $500.
Oh, we agree. I think in this sub case where I think we're counting on about 90% of these being audited, so.
And you better have proof that your client adopted it. So
Okay.
probably have them sign something with the adoption of it and put it in your tax folder, because You got to show that you knew, and that is an election that goes on a tax return. You must put it on your tax return. If you fail to do that, then you don't have an election.
Marvelous.
I'm going to make a bet.
What's the line tonight?
Take Kentucky, 26.5.
Hold it. Question. Just a minute.
But if you've got a nursing home that reports, Medicare or Medicaid, you can't do that because they're capitalization.
You're really that's exactly right. And that was another comment that had come up in other classes. Because of the Medicare, Medicaid reimbursement rules, that's great for all that conversation, but you're stuck at Medicare, Medicaid, so it didn't matter.
Move on.
At the very least, they have to stay consistent, though. We're in agreement there.
Assume there is no specific minimum that must be maintained in R4R, correct? Right? No, there is a minimum. Was it 1,500 a unit?
It depends. I think 1,500 is a good place to go. In 232, it's 1,500. I'd have to review the handbook to get back.
But there is a minimum.
There is a minimum. Well, thank you for bringing that up. Now we're back to what Peter said yesterday, right? The handbook's applicable, but you're going to say, did I sign the handbook? Is it really a requirement? Well, as far as HUD is concerned, it's a requirement. Can they enforce it in court? I don't know the answer to that. So from a handbook perspective, it's yes. But as Peter mentioned, a lot of those regulatory requirements were changed because they found they couldn't enforce it in court. So if you choose to go no, if I'm the auditor or you're the auditor, so I'm probably coming back and say the handbook says this, right? And that's what I would stick to. And then I think you have a finding if they choose to go below that. Well, you have to decide if you have a finding. How much below, what's going, the decision process on the finding is a little different. It's not an easy yes or no answer. But you have to decide if it's non-compliance. Well, I don't think, we're not, I think what we're not really, here's the question. Honestly, how does this come about? Jenny, how does yours come about? How to prove the release.
HUD brought you below.
In that case, here's what I would say. I don't have a finding for that. My bigger problem is MBI, and they're trying to pull me down below the minimum. HUD had come out and said they're not supposed to pull you below your minimum. So the field office screwed up. I'm not going to have a finding, and in fact, that's a whole other conversation about what happens next. The handbook covers that. But if you showed me, hey, HUD approved me to go below the minimum, I'm never going to give you a finding. Not at all. Absolutely not. Okay. Deposits are set by the regulatory requirement. Theoretically, if you go below, you can then request an increase. Nobody wants that necessarily. So it's just HUD let you go below the minimum. It'll go up again as you make deposits. And then, in theory, you shouldn't make that request below the minimum, but I know people do all the time. If HUD approves it, as the auditor, I am just going to indicate HUD approved it.
So there is somewhere in the handbook that's going to say there's a $1,500 unit minimum.
Yes. Well, I don't remember what it says exactly, but there's...
All right,
You hang out for 5 minutes. I'll give you the minimum.
I would say
I'll give it to you.
4350.1. Go to that handbook, chapter 4.
I'll go there right now. It's set up. You want to go there? How many more do we have?
2.
Oh, let's do those 2, and then I'll do it.
All right, this one's Marlo. So how are we supposed to document internal controls under the new framework? Are we supposed to document our understanding of all 81 attributes for the financial and the 14 compliance tests for a total of 1,215 attributes?
Wow. It's good math.
Hey, they've done the math.
What's our new realization?
Well, as I tell auditors when they ask me how do they get bigger or more revenues, I say send bigger bills. The answer is you're not going to have 1,215 control activities in any organization. Secondly, all 14 compliance requirements don't apply to one particular entity, so you're not going to have that either. As far as how you're going to document it is going to be driven based upon the practice aids that you've adopted in your practice. If some of you are using PPC and your QC document says to and have a bridging document that says here are the forms we fill out in an audit, you'll be using whatever PPC invents. If you're using ARM from CCH or some other practice aid, you're going to use what they come up with in terms of the things they want you to document. So, you know, it's not going to be that kind of a concept in terms of.
This is the time we want to talk about CX5.
Yeah, this is when we want to do it.
You might have to stand up and look at it. We're trying to make it bigger here. What we did real quick in preparation for this conversation was, now, Lori, can you just go increase this magnification up there to something? She can't see it because it split screens. Here, let me have the mouse and I'll come over here and do it. So, Marla, do you want to just talk a little bit about the PPC form itself?
Well, we need to see the top of the form instead of line 80 or whatever. We need to scroll it back down because I don't think Kathy changed, but just the first part here. Okay, this is CX5 that PPC suggests as one approach to documenting our understanding of internal control. Is my experience as a peer reviewer and having done about 400 to 500 peer reviews, most firms are not using CX4. They stop and use CX3 or 4. I mean, they're not using 5. But currently, this is the way the form looks. What we did was some editing. The first principle, the entity commits or demonstrates a commitment to integrity and ethical values. That principle was in COSO before the new revision. It's the same principle. It's principle number 1 under the control environment. And what I could foresee them doing is that now with the 81 attributes, 4 of them apply to this particular principle. Tone at the top, the company, the governing body has established standards of conduct. They evaluate whether those standards of conduct are being complied with. And then what do they do about any time when there's a deviation from the standards of conduct in the organization? Then you have here, under the CX5 form right now, you have the code from the COSO document, C0011, C0012, et cetera. These are the control activities or best practices that COSO identified when they originally wrote the document back in '92. And I think what they're going to do is they're going to go in here and say, okay, we've got this list of best practices that COSO identified, and they're going to go in under tone at the top, and they're going to say, well, maybe code C0012, a code of conduct or ethics policy exists. That will be under standards of conduct. They'll move it there and say, okay, this is a control activity that achieves the objective of having a standard of conduct in the organization. And then your problem is to figure out, has this control been implemented? Okay. You have to put a check mark, yes or no. Do they do that? Do they have a code of conduct or an ethics policy, conflict of interest policy? Yes or no? And then the second question you have to answer, is it effectively designed? Okay. I think that's what they're going to do with the form, is to take each of the COSO elements that they've listed on CX5 and organize them into these under the topics or the attributes. Now, they may go a different direction, but I think that's, given the short fuse they have, I think that's the way they're going to go with it. And so for those of you who have not been using CX5 in your documentation, in your work papers, and you've been using CX4, CX4 is pretty much going to go out the window, and you're going to have to come back and go through what CX5 has here with respect to taking the various control activities that are listed at COSO as best practices and go in and determine and make your check marks where they need to be. The same thing is going to be on the compliance side. When you get down to compliance, the Green Book is going to have the Green Book has been parallel to the COSO document, and so you'll have to go through and look at what the Green Book said or best practices and say, okay, is my organization doing any of these best practices? What I've been doing in my practice for the past 5, 6, 7 years, I guess, is I hand this form to the client and say, okay, which ones of these best practices does your organization do? And I have them actually put the check mark in the implemented box or the implemented column, if you'll slide back up a little further, Les.
Yeah, I'll go all the way to the top. I first wanted to mark all the new items in here. Those key components are going to be embedded. So there you go. I've just converted them to red. So those are the new, what did you call them again, Marlo?
Attributes.
Attributes. So we've put the attributes in there on this spreadsheet. And now Marlo believes what they will do is they will go under tone at the top. They'll look at which one of those items down below, the C11 numbers, 12, which one of those apply to tone at the top, and they'll embed it under the tone at the top. So what we'll have is attributes with subcategories. The subcategories will stay the way they are, and they'll just be reorganized into which attribute they belong under. Now, because the form may not be forthcoming from PPC very soon, Marlo said what he wanted to, say about 4, which is basically it's kind of inappropriate to use 4.
Unless you want to write a novel.
Unless you're going to write it all up, right?
Yeah. You want to write all this stuff down.
So what I've agreed to do is in the meantime, I'll go back and we will reorganize, at least take a best effort at putting those controls under one of the attributes. At the very least, so the form will be on the website. At the very least, you've made a best efforts, good faith effort to comply. And Marlo says there'd be no peer reviewer on the planet that would sting you for that right now.
That's true.
Unless you're in Chicago.
Yeah,
Illinois.
Unless you got me. No.
Unless you're in Illinois.
No, that's right.
So that's what we'll do with this. And so that, I think, has a form to help you move out. Now, the compliance, he and I are going to talk a little bit more about it. So after I make my pass through this, we'll send it back to Marlo. He'll give us some comments. We'll put it on our website. It's not authoritative, so that'll be on our website. We'll get that posted here by the end of the month. I mean, I'm gone all next week again, but we'll try to get that done fairly quickly and post it on the website in the conference materials. That will help them significantly.
Oh, absolutely,
okay.
yeah.
Does that make that easier to understand? And then you'll just go down and fill each of those components out based on the I think when the math was done, we were looking at a big matrix multiplying out. Yeah. But when you see the total number of controls times the total number of attributes, that's why I think that got done in that way, the math. But I think if you see it this way, tone at the top, those 4, all the controls fit into one of those 4 buckets. We go to the next one. We realign them under whichever attribute they belong to. You fill the form out, you're closer to compliance.
Mm-hmm. Now, you also have to remember, and I tell my clients, Les, if you would scroll it back up just a little bit, there. I ask my clients to go to this column and check yes or no whether they do any of these C0011, C0012, whatever. Which ones do they do? And immediately, especially on the CX5 1, which is control environment, which is the lengthiest summary of controls. When you get to risk assessment and activities and monitoring it, the number of control activities continues to decline. Most of them are in the first one, control environment. And they freak out because they say, well, we don't, I only put yes in like 3 of them, and there's 11 of them. Does that mean I have a bad environment of control because I'm only doing 3 out of 11? And the answer is no. The 11 that they had listed for that particular control objective or principle, as it's now called, are for Who's the biggest company now in the world?
No, I think it's not Apple anymore, but say Apple for now.
Apple. This is designed for Apple computer, not for
Mom and pop.
Well,
100-unit multifamily project.
Parkway Apartments or
LLC.
LLC down here. That's a multifamily apartment complex of 40 units or something. The 11 control activities that they list here are designed and are from Apple Computer, the giants of the world. They said, if you only put a yes in 3 out of the 11, then my problem is I have to decide, do they have enough? Or do they need to be doing one more or 2 more? And this then becomes the basis for your 265 letter saying, you have some deficiencies in control, you should be doing X. But don't freak out if they don't put a yes in every box, because this is not, this list of best practices is designed for the biggest company in the world.
It's all-inclusive.
It's an all-inclusive, just like PPC's audit programs were every audit step known to mankind ever invented. So don't freak out over that. Find the key controls. That concept is still there. What are the key controls that govern 2 things? With respect to financial reporting, what are the key controls that will prevent material misstatement? And from the compliance side, what are the key controls that will prevent material non-compliance? And in small, non-complex entities, you don't need very many key controls to keep that from happening.
So, big concern. From yesterday, there was a lot of concern. Big concern is really what's really comes out of this is we not really change how we audit in theory. We're really changing how we document the control environment at the clients.
Yes. And evaluate it.
And evaluate it. It's not necessarily that it's a big, we're going to identify all these new controls. It's just now we're going to make sure we're going through the internal control process in a proper manner according to the new COSO.
Yeah. And the other step that they're going to do is, you're going to decide, is this a particular control I need to test? Do I need to test this control? And they'll have a way for you to cross-reference that to where you do the test of that particular control. John?
In XYZ apartment, where the management agent handles most of these things, it would be my thought that most of these controls are going to be at the management agent's level as opposed to the owner's level, who mainly just get a monthly report at the end of each month.
Yeah, well, environment is the ownership level, okay? And there'll be some there, yes, absolutely. Mm-hmm.
Yeah, I would think tone at the top. I mean, that kind of comes back. Are they telling the management agent to cheat, to do something, So they have to have some policies, statements too, but the majority of the day-to-day stuff will be, but that's why it gets evaluated. You don't break out the difference here. You would say, ownership level, tone at the top, that's the ownership. As you move down, you'll move into management, right, Marlo?
Yeah, I mean, one of the controls is going to be, as an owner, we decided to hire a management company. We've outsourced it. Now, okay, what does the management company have in place? And are there key controls there that we feel will prevent any material non-compliance?
And then the other thing, actually, beyond that, to kick it in the can down the road one more time, does the owner have any monitoring requirements or procedures over the management agent? Yes, sir.
Okay, on the CX5 for PPC, there's like 5.1 to 5.17. So do you need to fill out all of them? I realize for maybe income taxes for a nonprofit, you won't have to. And and I think on eTools, on Smart E, in the risk and planning, it carries over 4, CX4, but it doesn't carry over 5.
What peer reviewers are looking for and what the standards basically say is CX1 or CX5.1234, which is environment, risk assessment, communications, and monitoring. And then the one that nobody fills out is 6, which is financial reporting and closing controls. That's the one most people are not filling out and saying what's happening with the process of closing the books and then getting from the closed books into the financial statements. So that's what I do in my work, is I get CX 1, 2, 3, 4 and the closing one. And then as far as the others, you have to look at the most significant, to me, for the list is, most significant asset. And I would say in multifamily, it's the volume of cash that's gone through, so the controls over cash. And as that becomes even more electronically oriented, now that I know a couple of my projects, the deposits are made electronically into the bank. They don't get a check anymore, No, I do not use CX4. CX4 and CX5 were alternative approaches to documenting understanding of controls. They are not and. Somebody made a comment yesterday about and. You either fill out 4 or you fill out 5. You do not fill out both. Unfortunately, PPC does not make that clear in the instructions to their guides. But no, they are not a and. You do one or the other. The problem with 4 is, and what they were trying to do there is accommodate small client situations by saying, instead of going through this list of controls that are used by the biggest organizations in the world, just write a novel. Write little paragraphs about what these small organizations do. That's what the blank lines were for, and CX4 was to write down what you guys do. But no, you don't fill out both of them. Unfortunately, I've seen that happen.
Well, it's not so hard to use because it just rolls over.
Yeah. But again, they may come out with a completely different, way to do it when they redefine 4 and 5. The first place you will see CX4 and CX5 is not in the PBC Guide to Audit of HUD entities. It'll be in the Guide for Commercial Entities, the audits of small business, or whatever they used to call that thing. The first one they'll do is in that book. While Les is conferring here, I wanted to add one note about my thoughts yesterday on the super circular. I think all of you have realized that when you get down to a June 30 client, that the wording of the report for A133 is going to change because A133 isn't around anymore. The wording of that report is being worked on, and it will be available by the time that we get to June 30, so that you don't need to worry about, where am I going to find the new words on how to describe having performed the audit in accordance with an OMB circular, because I don't think it's going to say, I've done my audit in accordance with the super circular, okay? I don't think that's the wording, but the wording will be out there, so don't worry about it. This morning, someone cornered me and asked me a question, and I think there's been a bit of a confusion, probably my inability to communicate that, but about the $750,000 audit threshold and what triggers that. The audit threshold is in Part F, Subpart F, which is an auditor responsibility. That $750,000 threshold is not in subparts A through E, which are applicable to the either grantor of federal awards or the recipient of federal awards. Okay? A through E are applicable to the grantors of the awards or to the recipients of awards. Why would they be applicable to the grantor of awards? Because the auditors in OIG offices, state auditors that audit the people who pass out the money, they have to follow what's in this new super circular, okay? So all that stuff's in there. The threshold is over in the auditing subpart. And the question that came up was, well, what if I have $300,000 in between July and December, and then I've got some more money in in January through June. I didn't get to 750 in the first 6 months, and I didn't get to 750 in the second 6 months. What do? And the answer is the 750 is from July 1st of 14 through June 30 of 15. If you get to 750 of expenditures by that June 30 of 15 date, then the audit requirement triggers in at that threshold, okay? And it's in subpart F. It has nothing to do with the requirements on the grantee or the grantors, okay? It's that level.
So that the confusion, I think, comes from the differing deadlines for different parts. So the 1226 thing, if you had expenditures, the client had to deal with all those rules, but it's not like it changed subpart F on that date.
Yeah.
Right?
Yeah. What they were trying to do was they were going to catch a few people into having to have the audit done at 12/31/14. Okay? Instead of waiting till 12/31/15. Okay? That was the sneaky Pete design of the rule, is to catch and throw some people into the hopper at 12/31/14. And that's why it's there.
But for most of us, realistically, we're dealing with
it in 15.
Okay.
Yeah.
Okay, now I want to make that clear because I've had this interpretation until this week. If I'm a 630 governmental entity and I have expenditures now in the first part of 15, right? But I'm an audit as of June 15th. Am I under the new subpart F yet?
No, not until the first year beginning after December 26, 2014.
You are my savior, Teresa.
So that FAQ that I mentioned?
Yes.
Wait a minute, let me get to the right one.
No, she's right.
Beginning after, not ending after, beginning after. So June 30, 15.
Would not fall under the new subpart F. So a 750 trigger doesn't apply to you. A $500,000 trigger applies to you if you're a June 30, 15 entity, right, Teresa? That's what I had told other people before, and I was listening to all this. I'm confused now.
Okay, here's the FAQ. When does a uniform guidance become effective? Subpart F audit requirements will apply to audits of non-federal entity fiscal years beginning on or after December 26, 2014. The revised audit requirements are not applicable to fiscal years beginning prior to that date. So essentially, your first one's going to be December 31st, 2015.
Okay, thank you.
When do subparts A through G apply? Is that commencing 12/27?
For entities, and actually, if you read that FAQ, that helps. Federal agencies must implement the requirements to be effective by December 26, 2014. So essentially, you have kind of like a tiered, it came out December 26, 2013, and a lot of people said that's the effective date. Well, that's the effective date for when the federal agencies have to start getting their implementing.
Compliance with that.
Right, start complying, which means December 26, 2014, this year, we'll get a present in the Federal Register. We'll get a Federal Register notice that has the implementing regulations for all the federal agencies, because they're all going to adopt at the same time. So then when they make awards, these new requirements will kick in.
Now, that's what I was afraid of happened yesterday and even this morning again, is that we're talking about compliance requirements applicable to the client versus audit requirements applicable to the CPAs, right?
Right. So the entities have to worry about it now because they have to start complying earlier than the audit requirement.
Teresa, you've shown me how to get that.
I actually sent it
to Kathy.
Yeah, to Kathy.
So what I'm going to do, we'll post that, but I will also send out an email because this has now turned into a battle from Hades.
It's very confusing.
and I'm going to copy Teresa on it. She gave me your card. So if she has comments, she probably can let us, hey, that's not exactly the right way to say that. But we'll get something out summarizing this because this whole thing caused enough confusion to send me into drugs. I sat there in the back thinking of all the other things I had to do at that moment in time, and all I can hear is, what the hell did we do wrong already? So I appreciate that. So we'll clear that up. But I think that makes every audit. Do you feel better now, auditors? Oh. Well, we just deferred it, right? Anything deferred is something gained.
Well, and it's not partial implementation either.
That's right.
It's for the audit requirement.
There's
Now,
no
as an-
partial.
Right, for an auditor at June 30th, 2015, what you do have to worry about is you may have funds that are subject to the old circulars, the old cost principles.
Especially cost
and
principles.
have 6 months' worth of funding that is subject to the new
Circular, or whatever this, whatever
new
the
CFR 200.
whatever it comes out as in terms of the requirement.
Yes, so as auditors, you will have to worry about auditing two
Differences. So, and now, just practically, can I say, maybe you can monitor my practical comment. Practically, from a HUD perspective, debt's going to be the same. Reserve's going to be the same. Surplus cash going to be the same. Section 8 is going to be the same. So we're really talking about things like cost allocation plans that are affected. So I'm cost sharing, overhead type things that may have changed from one rule to the next.
Procurement.
Procurement. So these, because there are some substantial changes in procurement. These are the areas, and so it's not like a wholesale revisit of the audit steps for a HUD project. There's only probably 20 to 30% of these things that are affected. Otherwise, we expect the supplement or whatever is issued in that regard, under 200, to be about the same thing as it is now.
Right, and that June 30th, 2015 compliance supplement that's supposed to come out in March every year, but we know it never comes out until June or July. That compliance supplement 2015, from our understanding, is it'll be huge because it'll be the old stuff and the new stuff.
Okay.
So you'll have two complete sets of compliance supplement parts.
Yeah, after we talked at lunch, I was going, okay, we really need to settle this thing before the Q&A is over, because I think what you said settles everything back down. Because I just think we got confused, people listening to Marlo go, it's effective, and Marlo's right. It is effective, but that didn't mean auditors had to change. It means clients have some adjustment to go.
It still could affect the auditor, though, because if the client hasn't done what it's supposed to do, then you have a potential issue with internal control.
We agree completely.
Yeah.
We agree completely. It's not that it's not effective. It's just I don't have to worry about it until my first full audit of 12/31/15, and I may have competing, or June, I come with this, I'm auditing the same I'm auditing A133, is maybe the best way to say that, not the new circular, but the requirements may have changed at December, right? Or whatever that date, 12/26. I may have new requirements, and if they're not following them, I have all kinds of audit issues. And that's why she said, look, the supplements will be huge because there'll be old rules, new rules. And my only thing is I didn't want to get everyone excited saying it'll be a wholesale revisit. There's just certain things that will be revisited.
You do an A133 for the fiscal year ending June 30th.
Yes.
But you could have a material weakness or significant deficiency in internal control if they have received funding after 12/26 and they haven't implemented any of the rules. So you're doing an A133 report, but in that A133 report, you could have disclosure of an item that relates to the new rules.
Yes. I think I appreciate that clarification, because I know that everybody maybe appreciates the full extent of what that clarification really means. Although we're taking a deep sigh of relief, we still have significant issues to deal with at 6/30 or even 3/31 audits. Technically, like Marlo said, I may have some issues at 12/31 audits. I can't imagine it being all that material, but you never know. Oh. Okay, Lori, one last time.
All right, here's our last question. What type of available resources are there to help me analyze the SKEs for client personnel, including any safeguards against the independence issue in non-attest services? I'm looking for practical tools that will help with my documentation as a sole practitioner. How do I get it?
Now, Marlo talked yesterday about not needing a spreadsheet. AICPA on the GAQC website produced a spreadsheet. We have several practitioners that produced one on their own. What the spreadsheet she's going to show, if you just minimize that or stop the slideshow. Here's one a practitioner put together that really, it's on our website. This was styled originally for a housing authority. I think it's extremely similar. 5 peer reviewers have told me they would bless it, you know. And Marlo talked about some of the other things. PPC's form, I know in Illinois it failed. I don't know about other places. So I'm not, you know, what generally is accepted is that this is acceptable. Now it's in 4 tabs here just because we printed it to show, but on the website, this thing is a continuous spreadsheet. It's very similar. I don't even know how many wording differences this guy had from it. It's very close to the AICPA's. If you want to know for sure, you can get that spreadsheet. It's what, $28 or something like that? There you go. You don't even have to be a GAQC member. So we have one in Excel format now. You can download it, convert it to the AICPA one, convert it to Excel from PDF, and fill it out.
Yeah, there's about 58 pages of supplementary material. We have some suggested safeguards. We have some examples. And GAO did look at it, so they at least... They blessed it. Yes. Well,
sort of. Not officially blessed it. And it's not really their decision to make anyway because it's going to come back to peer review. But peer reviewers have been told, Teresa, what?
They don't have to use it. They can use whatever they want to, but they need to make sure that they have enough documentation to satisfy the SKE, the assessment.
You have to have shown in your documentation that you performed an actual assessment. A checklist will not make it, right? Generally. I've seen checklists supplemented with memoranda make it, but as a practical tool, this is about as easy as I can give you. The AICPAs, they're about the same. Fill it out. It's not hard. So that's the only thing I can tell you right now is something like this will make you, hopefully, bulletproof. Hopefully. Except maybe in Illinois. Actually, in Illinois, this did work. This is all they would accept. Now, I don't know that they said it had to be the AICPA spreadsheet, but they said they were looking for something similar. Now, they didn't have a spreadsheet. My one friend who was a peer reviewer, he got nervous and wrote a memo. He had PPC, he got nervous and wrote a memo, and his peer reviewer told him the memo saved his hide. So this is as easy as I can see. Marlo, anything else?
Just one other thing I did not mention yesterday. Remember that SKE is not intended to say that these individuals who we're evaluating, that the SKE rises to the level of re-performing what we do. The level is, do they have the ability to say that when they read the financial statements, that they can understand them and recognize there's something wrong. It has nothing to do with can they write a 3-paragraph footnote about derivatives. That's not where we're going with SKE. SKE has nothing to do with re-performance. It has to do with can they look at what they see and does it make sense? I like your DIMS approach. Does it make sense? Is it reasonable? Does it look right? And people who couldn't make a journal entry to save their world, you know, they're not expected to be able to make journal entries. They're expected to be able to see that the result of the journal entry made sense and was reasonable. So don't think that you have to find people in the organization who have the skill set, for instance, to write gap footnotes. That's not the level you have to achieve with this person.
Anything else, ladies and gentlemen? Anything? That's the end of our questions. We covered, I think, the other issues I wanted